Hi, in this video we're going to learn about how to do backdoor Roth contribution. So this applies to people if you're single, if your income is more than 150,000, and if you're married, if your income is jointly more than 220 something thousand. So if you have high income and you would want to check the limits, and you still want to contribute to Roth account, which basically you contribute money to it after tax money and it grows tax free, but you can't contribute to it if you have high income. But there is a way for high earners using backdoor Roth process, and these are the three simple steps in which you can do it. Step number one, you first open up two accounts, a traditional IRA account and a Roth IRA account. You could have an existing Roth IRA account, that's okay. Then you just need to open up the traditional IRA account. Step number two, and so this step it's instant. You go to an online broker. Step one can be done instantly within like few minutes. You can open both of these accounts if you don't have one. Step number two, you can easily load money from your bank to this traditional IRA account. So then you'll have to set up this transfer from your bank to your traditional IRA account, because you can't contribute with if you're a high earner to Roth, but you can contribute to traditional IRA. So you first open up traditional IRA, you load money into traditional IRA, and based on your age and the year in which you're doing, there is different limits that you'd have to follow. So in 2023 it's 6,500, 2022 is 6,000. So step two, you move money into an eligible IRA account. IRA account for high earners, you can still contribute money. And then step three, you do this backdoor conversion wherein you move your money from your traditional IRA to your Roth IRA account. But this typically takes a day for this money to be loaded into, a day or two into this account, and then into the traditional IRA account, and then you can move it to the Roth IRA account. That's it. So those are the three simple steps. You can't do directly to Roth, but you can do it via traditional IRA, and you can do it every year. There are a lot of qualification criteria here in terms of what you need for you to be able to do it. First, you cannot do this if you have a traditional IRA account already with funds in it, or any IRA account like rollover IRA with funds in it, or SEP IRA with funds in it, simple IRA with funds in it. Directly, like with these three steps I have said, it's only applicable to those people who don't have an existing traditional IRA account. But if you do have one, can you still do it? For that, there's one more step, but that's where you really want to get your tax advisor or financial advisor involved, in which how they'll tell you how to do it. There are some frequently asked questions like, hey, why not directly contribute to Roth? I covered this briefly, but if you have high income and this limit changes, then you can't contribute directly money to it. So in this case, single tax filers with income more than 144,000 can't do it in 2022, and then can't do it for if you're married and your total income is 228,000 for 2023. So you can't do this directly to Roth. So you have to first do traditional, convert it backdoor to Roth. And how much can you contribute? Again, this limit changes every year. For 2022 is 6,000 for people age less than 50, and 7,000 for age greater than 50. And likewise, there's different limits. Can you and your partner, if you're married, do it together? Yes, each of you get this limit. So you can contribute, let's say 6,500 for 2023 each. So that's like 13,000 you can contribute. And why not just do traditional IRA? Well, it depends on your income. Traditional IRA is still a good idea, but you will not get any deductions in your taxes if your income is greater than 78,000. So this whole thing applies for folks who have very high income. So that's why there's no benefit. And are there any income limits to contribute to traditional IRA? No. So that's the loophole, right? Where you can contribute to traditional IRA and there is a way to convert it backdoor to Roth. Is there time restriction? Yes. So you have to, for a given year, for a given calendar year, the limit is somewhere in April the following year. So for 2022 contribution, the limit is April 18, 2023. And similarly for 2023 contribution, it will be April 18 or something 2024. So if you are before April, this deadline, you can do this contribution 13,500 for 2022, 13,000, actually 12,000 for 2022 and 13,500 for 2023. So that's it. And, there's no income list restriction as we covered this. And that's one final pro tip. So I would say contribute $10 less than the limit, because what typically happens is, if you remember in step number one, once you create those accounts and load up in step 2, that money will stay in that account, the traditional IRA account, for a few days, and that will accumulate interest. So if you want to do this process every year, you would want to contribute $10 less, because you will get interest, and that you will have to roll over again so that you can empty your traditional IRA account, because that's the prerequisite to make this steps simple. So if whatever the limit is, do $10 less, do the backdoor Roth step 3 conversion, and then at the end of the month, check for that interest that comes in, and then again roll over that interest from traditional IRA to Roth IRA. So those are the 3 steps and some FAQs. Again, this video is for entertainment purpose only. Consult your professional financial advisor for your specific situation, because it could greatly change tax implication and various risks involved. So check with the professional. Thanks.